So why do we have such a weak Dow when the US jobs were so good on Friday? Good news is bad news at this stage, on the basis that the market is pricing in a rate rise. Now, are we going to have a rate rise in the autumn, the December, or is it going to be pushed back into early part of next year? Markets don't like rate rises. It means consumers have less money to spend, corporate borrowing costs more money, etc., etc. All obvious points. But this is why the market is reacting so badly to good news. And of course, we've got the obvious situation of Greece, still not resolved. It's rattling on. Will the markets bounce on some sort of resolution and plan for the long-term future of Greece? Yes, could do. But in the meantime, don't sit there anticipating it and pricing it in yourself. Just let the markets do their own thing. And at the moment, this is a very bearish market. But we have major support down there at, I think it's 760. Now that would fit very, very nicely with the data we've got coming out, i.e. retail sales on Thursday. If that's a good number, if we drop into this support level underneath the 200 EMA, which is typical for a market to overshoot a 200 EMA, prop ourselves up on that 670 and then start pushing back, we end up with a hammer on the 200, which could generate a push into these higher levels, and that's what I'm looking for. But I'm certainly not going to picture the trade and start trading on that basis. I will just see how the market reacts around that pivot point. Keeping on the theme of indices, this is the DAX. Same thing, we've got a pivot level, a fib level down there at 850, 860. That looks like a very likely target given the price action over here on February this year, early Feb, mid Feb. So a very bearish bar, still not finding buyers, so they're dropping the price until they find buyers. We are getting low RSI, low stochastics, so that fib level looks like an obvious target. In the meantime, if you look at the euro, this is a really healthy looking chart. I don't know, quite sure why that's suddenly come up. So I would look for a pullback to this level here. So the market is showing its hands. Let's try and get that 100 EMA down there, which would be 150, 160. To see if we can come back and attack the 530 level. Obviously a lot of resistance up here, huge amount of resistance at the 460 level, but yeah, that's a nice close. That's just a good reason to wait and be patient and try and get a pullback in that one. Pound US did have a good day, but we are quite a lot more congested than the euro, so I would suggest you try and buy a pullback in the euro. Pound yen, we've got very, very little data for the UK this week. Tomorrow we have no UK data. Tomorrow we have some US jobs data according to my list. But this is actually a sell signal. We are closing lower than Friday's bar, Friday's open. So that's a sell signal on the pound yen. However, I would be looking very carefully to buy a pullback to the 950 mark. So if we come down here, test 950 and hold, that would lead, this is the 21 EMA coming up here, that would allow the market to come in contact with the 21 EMA and give us a chance to potentially get another leg up to this 19,500. As you can see, I've got the fibs marked on that one. Euro US just coming back into this reversal bar here from the 4th, which was last Thursday, so just be careful. You can see this 38.2 fibs is quite a brick wall up there, quite a fire line. So I would stick to the Euro US and not much else. Oil is range bound. Let's do away with that. This is the continuous contract, that's why it's showing gaps. So lots of support, resistance up there, support down there. So this week, if we see a retest of 56.80 and hold, then I would be tempted to buy. Otherwise, I would leave that well alone. Gold has got this hammerite bar from Friday. We had a higher close on the day, not higher than Friday, obviously. So range bound underneath this trend line. So if we come up and kiss the trend line, meet the 21 EMA, that could be the rotation back down to the downtrend. But if we start closing above 1175, then obviously we need to just, I would just stand aside and let that one work itself out. Certainly not wanting to engage that at this stage. So that's all I've got to say about indices and Forex. Let's just catch up with a few stocks. This is UAL. I'm actually still in this, and I have been in it ever since bought the pullback up here. It's doing nothing, absolutely nothing. So I'm going to sit tight. I'm holding on to my stop, which is my original stop. I'm just slightly underwater with it. Let's see if we can do something this week. Facebook is a good bellwether, and after this big push up on the 3rd, we have found some weakness. However, we are still holding the range of the 3rd that this bar created. So all the time we're doing that, we still stand a chance of pushing up, but admittedly that is looking weak. I would just sit tight. If you're interested in Facebook, I would sit tight and wait and see if we can come down and test 78, at least 78, and see if that level holds. But I'm just keeping a very close eye on that one. Bank of America. Potentially getting ready to drop. You can see we're coming up against this fib level here, so this is a sell zone. 1733 is a sell zone. We've had this sell-off, that pullback, that sell-off, these waves to the upside here. So if this bellwether can't hold up here, then we need to be very wary about this market. Let's have a look at another bellwether. Let's look at Apple. Apple is hanging in there, but struggling. Yeah, that is really struggling. We're right on the line there, with the potential for that to, see some profit taking and into the summer doldrums, potentially come down to 120. So I would just steer clear of that for the moment. Just come back to the sector that we've been looking at. SPI, Spire Health in the UK. Bit of a distribution pattern up here. Just can't crack 360. So I would be very, very interested at about 330 on a gap fill. So I'm going to keep an eye on that one. Just because these indices are weak does not mean to say everything is going to sell. What it does mean is you need to be cautious, and you need to find sectors. If you are wanting to buy stocks, if you are bullish, you need to find sectors that are holding up. And this health sector has had a great run, and we've seen some pullback, so these are potentially good places to get back into these runs. This one, NMC in the UK, has had 2 runs, 2 legs, has potentially got a third in it. I want to close above 790 to get me in on NMC. A lot of the US pharmaceuticals that have had good runs are running out of steam. It's only obviously the first day trading the week, pretty weak open, but if you are looking for longs, if you particularly want to feel the market is bullish and this current sort of slackness in the market is an opportunity, then these are just some of the ones to watch out for as the week unfolds. Alright, so I'll leave it there, and we'll do a stock scan in the room tomorrow. We'll have a look at Forex, and if the Forex market gets quiet, or while the Forex market is setting up, we will just look at some stocks. Alright, so join me in the room, hope that helps, and